What advice do you give to the typical buyer that is priced out of the market? They're approved for, let's just say 400, and the area they're looking at is 550, 600. What advice do you give a person like that?
Maybe people have to be more open up to condominium market, and condominium is still affordable. So you can buy for $300,000-$400,000 condo on East Side right now. So it's plenty places for sale, and for $300-$350 you can buy in Kirkland, you can buy in Redmond. You can even see in Bellevue, on the East Bellevue as well, those condos available. I think this is going to be new high demand for many buyers who are not going to be afford to buy a house. And that's going to be probably our new normal stance. Myself, I'm back from Eastern Europe, and not many people actually live in the houses there. So in Europe, most people live in condominiums, and that's normal. Rich people live in the houses, right? So we only limited ourselves between like Puget Sound and mountains, and we have like 2 lakes between like Washington, like Sammamish, and we have very limited land available when we actually can build a house, can have a house. And I think condominium market going to be increased, and people going to be move more to kind of urban style living in condominium in the future.
What I typically, the way I see that as far as how to answer that question is, you got to compromise somewhere. Like what you just said, if you're approved for 4 and you really need 6, but there's no way to go above 4, it's either you do 2 things, right? One is you change what you're looking for, like you said, buy a condo, buy something else. Or 2 is now all of a sudden you have to sacrifice with the location. Go farther out, right?
Yeah.
And then the third part is maybe you do something different and just go farther out, but now instead of buying a condo, maybe you buy a duplex, and maybe you look at this move as this is going to be an investment move for me. And we all know that if somebody's buying a duplex, now we could use, as a lender, we could use rental income to offset payments. Therefore, maybe we could get them up to $650 on a duplex. And if we get them up to $650 on a duplex, and now all of a sudden they go farther out, now does that duplex investment, is it worth the drive if you are still driving to work, right?
Exactly.
And a lot of people don't realize it's a temporary thing. It's not a permanent long-term move. And I think a lot of people, when they look at a house, they look at long-term. And I think in that scenario, you got to look at it as what's going to make the most financial sense for me. If I could get into a multifamily, now all of a sudden I'm building equity. Now, at least I have something that's going to adjust with the market. Now, if I, once I'm ready to buy that home, and that might mean I need to pay off debt. It might mean I need to increase income. Well, when I am ready to buy that home, now all of a sudden I have a different property that, hopefully is cash flowing.
Yeah.
Right. And hopefully now is helping me with my debt to income ratio and all that. So I definitely agree with you. I think, especially for somebody that's just starting their life out, maybe a young family, entering in the workforce and everything, you got to remember that time is on your side, and waiting is not, you want to get into the market. If you have somebody that they're just starting their life out, somebody that's a single young person, a couple, just married, whatever that is, obviously housing is important. That's the beauty about housing. At the end of the day, you could create technology. You could have a change in the way we do this or the way we do that, whether we are going to be driving cars or they're going to be self-driving cars, whether there's going to be
flying cars
or flying cars, right? Or anything for that matter. One thing is, no matter what happens with the workforce, how the workforce changes, what we do here, what gets outsourced, the one thing that will never change is, at the end of the day, you have to have a roof over your head, right?
Yeah.
And I think that most money is made, or you could say 95% of money is made either in real estate or the stock market, right? You just got to pick one.
Yeah.
Or have both, right? If you're smart, you're going to have both. And so when you look at that and you say, for that person that's priced out of the market, I think this is the time, like if you're entering the market, you probably have more flexibility to change your lifestyle now than you've ever had. It's a lot different if you have 5 kids and you're trying to go to a condo because you waited or a duplex or whatever. Especially at an early stage in your life, life's an adventure. Make the adjustments. You could work around it. I think the key is to get in, because a lot of people don't realize. I mean, if you're getting in right now, let's just say at a 2.5 to 2.75% rate. Well, at the end of the day, whether real estate goes up or doesn't go up, how much you pay for that home is factored by the interest rate, right? That's how much you truly pay for the home. It's not the sticker price that you're paying unless you're buying cash, like a lot of people are. It's what you pay at the end of it. And a lot of people don't realize how much equity you're building every single month with every payment you make. And so when you enter the market 3 years later, now all of a sudden, if you are gonna let go of the property, or you're gonna, let's say keep that as a rental for a long term, financially you're stronger. You should also be thinking about, how do I increase my income and how do I decrease my debt or increase cash flow, right?
Yeah.
I mean, for somebody that is going to be savvy in the market today, that's what it comes down to when it comes to real investing in general. It's increase your income, decrease your debt, buy assets, dump liabilities, put yourself in the strongest buying power, and then whatever you could afford at that time, make the move.
Yeah.
And protect yourself against, say, hyperinflation, but inflation going on a level that we're not used to seeing in our market.
Yeah.
That's my take on that. Now, Oleg, one question that also comes up from a lot of different, you could say, buyers, right, that have their home. They ask themselves, should I be buying an investment property? When is the right time to buy an investment property? How do I prepare to buy an investment property? Where do I look? What's your advice to those people that they already have a house, they like their house, they're good, but now they want to continue to build that real estate portfolio? And as you and I know, the first one is the hardest one.
Yeah.
The first investment property. So what advice do you give those people?
These people have to have roof overhead, like you just say, and rental property will be desirable pretty much in any locations, anywhere. So it doesn't matter. You don't have to buy in prime locations where like very expensive right now, but you can drive farther, you can travel. And for people who buy in first investment property, I think it's a great idea just to buy locally. Can be anywhere. Can be in Issaquah, can be in Arlington, can be like anywhere else. So for example, Arlington right now, it's very affordable. And what I heard yesterday on the news, the Amazon moving there. So
Amazon's moving to Arlington.
Yeah. This is like, yeah, they have a lot of land. Imagine what's going to happen with those properties, with this real estate, right?
Eventually, all land's going to get filled in, right?
Exactly.
It just keeps going. So.
Yeah.
All right.
So Amazon moving to Arlington, and Arlington prices are going to be very desirable. So that means employment, that means new stores, that means new movie theaters, and everything else around that hub.
What about the people that don't have a down payment, or they're struggling with the down payment, and they want to buy an investment property, but the issue, they have a property already.
Yeah.
Now all of a sudden they want their first rental.
Okay.
They don't have the 20% down or 15% down. Let's just call it 20. I mean, we know you could get away with 15, but it's very few people if you do. But let's just say 20. You don't have the 20% down. Typically, what I tell people like that in that scenario is, and they're like, well, we don't have the down payment. A couple things come to mind, right? And again, this is where there's going to be some sacrifice. The first one that comes to mind is, well, why are you buying an investment property? Why not buy a new primary?
Yeah.
And turn the current property that you have into an investment property, right? That's one. Now all of a sudden you could buy with 5% down because you're buying a new primary.
Here you go.
So now all of a sudden 5% down is, typically somebody's looking for an investment property. They're saved up some money. Usually they have 5%. Now a lot of people are like, well, I love my house and I don't want to move out of my house and all that. And I think this is where if you want to be a real estate investor, and you just don't have the funds for the down payment, I think at the end of the day, this is where you got to take the emotional side out of it and say, what's more important? Is it more important the home that you live in right now that you made home? Or is it more important for you to get that next property? And then a year after living in that property, go for another primary and get another primary and keep churning rentals as you go. That's one option, right?
Yeah.
Second option, I think, when somebody's really emotionally attached to their home. Let's just say,
that's what I want to say. Like people emotionally very attached to the house.
Emotion, right? I think at that point you kind of have to make a decision. And what I've seen people do in the past is they said, you know what, we just can't rent this home out. We love it too much.
Yeah.
So and again, you got to look at, if you want to be aggressive in real estate and grow in real estate, you got to make aggressive moves that sometimes are not popular, right? Sometimes they're not comfortable, but you do them because long term is where you're looking for that comfort and gain. For those people, I always say, well, why don't you just sell the home that you currently have? Now all of a sudden, let's say you've unlocked $225,000
Yeah.
Now you sold that home. Now buy a new primary with 5% down. That's maybe not can be as nice as your current home, but now all of a sudden you have a new primary there, and then now you have the difference for real estate investments. And I think a lot of people, they just need that first one to trigger the next one, and build a real estate portfolio over time. But I think either way, in that scenario, you got to make a decision or stop thinking about it.
That's very interesting, Sad. Thank you so much, Oleg. I think it was very interesting conversation with you recorded today, and glad you found time to come here and record this with me.
Absolutely. Thank you for having me, Oleg.
Thank you.